Good morning, everyone. This is Angelo Zitis from RNFX, bringing you the morning comment for the 4th of July. Theresa May tries to keep EU rules for trading goods. According to media, UK's Prime Minister Theresa May is facing a new showdown within her cabinet regarding the trading of goods. Theresa May's plans could include keeping EU rules regarding the trading of goods and, at the same time, continue to collect EU customs at UK's border. The Prime Minister currently has one-on-one meetings and intends to have the plans finalised and agreed by Friday at a cabinet meeting. On another Brexit front, reports state that UK businesses seem to be reaching a breaking point in the lack of Brexit clarity as time is running out. Should there be further negative headlines until Friday about Brexit, we could see GBP weakening. Cable continued its sideways movement yesterday and during today's Asian morning tested the 132.15 resistance line. We see the case for the pair to continue to trade in a sideways manner. However, some bullish tendencies could exist if the services PMI released today favors the pound. Once again, the pair may prove to be sensitive to any fundamental news regarding Brexit. Should the bulls take over, the pair may break the 132.15 resistance line and aim for the 133.30 resistance hurdle. Should the bears take the reins, we could see the pair breaking the 131.25 support line and aim for the 130.40 support barrier. NATO spending disputes rattle allies. A disagreement between the US and its allies seem to resurface as the military spending issues within NATO starts to prevail once again. A letter was sent by President Trump regarding the issue to a number of allies, scolding them about low budget spending on security. Canada, Germany, Italy and Netherlands have confirmed the reception of such letters and have answered accordingly, pushing back on Trump's scolding. The issue may hit its peak at the NATO summit next week in Brussels, according to media. Should there be further negative headlines about the issue, we could see increased volatility mainly on US dollar crosses. USD/JPY dropped yesterday, breaking the 110.75 support line, now turned to resistance. Technically, it should be noted that the pair broke its upward trend line incepted in its latest sessions, while the RSI indicator in the 4-hour chart could imply a rather indecisive market. The pair could continue to trade in a sideways manner today as the 110.25 support level remained intact against its pair testing during today's Asian session. Also, it should be noted that as today is the Independence Day in the US, volatility could be reduced somewhat. Should the pair find extensive buying orders along its path, we could see it breaking the 110.75 resistance line, while if it finds selling interest, it may break the 110.25 support line and aim for the 109.75 support level. In today's other economic highlights, in the European session, we get Eurozone's market final composite PMI for June and UK services PMI also for June. As for speakers, BOE's Sam Woods and Victoria Saporta speak. On the commodities front, crude oil prices dropped yesterday in the American session due to confirmation of supply increase from Saudi Arabia after a request was made previously from President Trump. However, the commodity rebounded as the API weekly crude oil inventories released a drawdown of minus 4.5 million barrels and regained most of the losses. For more information, please read the full comment on rfx.com or download our app and get all the information you need to trade. You can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel or circle us on Google Plus to get more trading ideas. This is Angelo Zitis from RNFX wishing you solid trading.